Good morning and welcome to Business Morning. I'm Ladi Williams.
And I'm Chimeze Obi Iwago. Well, global rating agency Fitch has warned against the federal government's Ways and Means facility with the Central Bank of Nigeria and says it highlights weaknesses in public finance management. Now, part of the report titled Nigeria's Deficit Monetization May Raise Macro Stability Risks reads, sustained use of direct monetary financing could raise risks to macroeconomic stability given the current weak institutional safeguards, but we expect the FGN to reduce its use of the facility in 2021. Okay, let's get a quick reaction to this from financial and management consultant and the CEO of Flame Academy and Consulting, Oji Udemezwe. Good morning, Mr. Udemezwe. Thank you for joining us. Well, is Fitch on track with its warning about the federal government's Ways and Means facility with the CBN? The pre-existing overdraft is estimated at 9.8 trillion naira as of the end of 2019.
Well, the warning by Fitch is quite proper and fit because we have to be disciplined in the way we run our economy. In as much as we appreciate the fact that Nigeria has had a very tough cash flow position in the past years, consequent upon the struggle in the oil price right from 2014, 2015. We've seen a government that has been running quite some huge deficit budget financing in the past years. But surprisingly, the Nigerian government has been using the strange, not normal ways and means approach to dealing with this deficit, budget deficit. Ordinarily, when you have a deficit, government uses instruments like bonds and so on to raise money from maybe international financial market or to also get money from bilateral means, IMF loans, World Bank, and so on, and multilateral and bilateral and commercial means of borrowing, or to also raise money domestically by issuing treasury bills and other government treasury instruments. But when they don't do this, the alternative that they have is the direct monetary financing of our fiscal deficit by using Ways and Means, which, by the way, is very popular in India, where the Reserve Bank of India uses that to support the different states in India. So that has been the practice in Nigeria here, where government has been taking money directly from the central bank.
Okay.
Even though there are different ways of doing that, supported by government instruments. But here, the central bank is dipping their hands into the reserves, particularly the reserves kept by, from the financial system, deposit money bank, and use that to fund shortcomings in the government's finance. It is dangerous because, you can create a lot of instability, like the secretary pointed out.
Anyway, some analysts are also saying they hope the CBN is not lending the government from the CRL debited banks. Is that a possibility?
It's a very huge possibility because the concept of CRL is that every deposit money bank in Nigeria must reserve a particular portion, a particular percentage of customer deposit, in their reserve account with central bank at every point in time. So it is right to assume that there's no point in time you cannot have trillions of banks' money deposit lying with the central bank, because every day you're having deposits and withdrawals, and there's a net flow back and forth between central bank and this commercial bank. So central bank can estimate that maybe over a period that they have maintained a reasonable balance of, let's say, a particular amount, that they can, leverage on to finance government borrowing. But the reserve kept by central bank is not meant for that purpose. It's usually to just reduce the amount of money available for lending in the economy, to manage monetary supply in the economy. But to dip hands into that reserve and fund government cash flow issues is a desperate measure, and it does not connote appropriate, prudence in managing our economy. And, doing that is also a danger to the banking system if at some point, those monies are not returned to by government as they should. If you read the Fitch report, you find that instead of short term, where those monies are meant to be returned in 3 months or less, those monies have been rolled over several times in the past years. And that's a dangerous signal that government is very desperate and they have lacked, proper ideas on how to raise financing for, funding our budget.
Well, thank you very much, Mr. Udemezwe. Let's just hope that is not what is happening. But I'm sure At a better time, we'll have enough time to talk more about that. Thank you for your time this morning.
My pleasure always. Thank you so much for having me.
And on where we are regarding our participation on the AFCFTA agreement, the Nigerian Customs Service notified the Nigerian business community about the steps that must be taken to enhance their participation in the AFCFTA project to ensure its smooth and full implementation. And don't forget, the federal government had declared this month as AFCFTA campaign month in Nigeria. And since then, there has been meetings upon meetings between the private sector players and the relevant authorities. Our trade expert, Bamidele Ayemibo, has been part of these meetings. He joins us next. All right, thank you very much for joining us on the program, Bamidele Ayemibo. Good morning. It's a pleasure to have you on the show this morning.
Good morning. How are you today?
Very well, thank you. Well, this week, I know, has been very busy one for stakeholders like you, as you have been having series of meetings regarding the implementation of the AFCFTA. Tell us, what has been the major conversations around this?
What has been happening is the putting together of the processes that will enable individuals in Nigeria to be able to obtain the certificate of origin, which is a critical document that makes your product eligible for export under the AFCFTA. In addition to that, also we have we're also expecting the release of the tariff schedule negotiated by the Nigerian government that will be able, and the one for other countries to be able to know in Nigeria what are the products that will be on the sensitive list, non-sensitive list, and also the exclusive list. And also we expect a lot of sensitization to begin to come on now. I know National Action Committee is working a lot to make that happen in the coming days.
Okay. The Nigerian Customs Service on Tuesday announced the mandatory guideline to what would ensure the smooth implementation of the AFCFTA. One of such is the need for each member country to have a representative in the Continental Chamber of Commerce. How important is this as a guideline, and how would this help in proper implementation of the deal?
I think it's a very important point that Nigerian Customs made. Like I said, each country have the negotiated tariff schedule, which will determine what can come in, what is under sensitive, exclusive, and non-sensitive, and having every representative in that country providing information for each of the tariff schedule and information about their country, I think is important. But more importantly also is, one of the issues we have under the ETLS in West Africa is the fact that when I have issue, it's not so easy for me to make that issue known that, okay, I have a product, the product I have right now is eligible under ETLS, and I'm not allowed to come into a country, or I'm allowed and I have to pay duty. With this Chamber of Commerce, representative for all countries, it becomes a lot easier to pass message across. It becomes a lot easier to get across to the custom of every country through the representative at Continental Chamber of Commerce. So I think it's a very, very important point that customs have made.
Yeah, you talked about the tariffs. Of course, the Nigerian Customs Service indicated that they are still awaiting the clear directive concerning that for all goods covered by the AFCFTA. Now, does this bother you at this time, considering that we have been on this AFCFTA matter for such a long time, and up till now we are yet to be clear on the tariff? Does it bother you?
Chimeze, you should remember that Nigeria did not sign this agreement on time. And it was just late last year that we actually ratified. So for me, it's just a sign. The reason why we're having this at this time is just because we did not start on time. So I'm not surprised at all, because we didn't sign on time, we didn't ratify on time. If AFCFTA had started July 1, like was planned last year, we would not have been able to be part of it, because we delayed till December before we ratify. So I'm not surprised. I'm concerned because we're not able to start on time, but I'm not surprised because we did not sign and ratify on time. So I expect that. In fact, I was talking to someone, I said, in my opinion, I'm not sure we'll be able to do any shipment under AFCFTA. Probably, I'm looking at maybe third month of the first quarter. That's sometimes in March. Because when the certificate of origin detail, how to obtain is out, then each person will apply, and they have to go through a process for those products to be eligible for export under AFCFTA. So maybe that will be done for the whole of February, so we can begin to see shipment from the month of March.
Okay, looking at preparedness now, are you confident the Nigerian Customs Service is prepared to fully deploy its service at short notice?
I don't think so. It's a civil service, it's the bureaucratic process. I don't think so. I think Nigerian Customs Service need to really step up their game. The challenge I have with a number of our agencies is they are not business-like in the way they handle their issues. For example, at the port, we have delay. We have a truck being delayed. Truck are unable to enter on time. Goods are being delayed. The new process of CBN has made them to have some backlog. And someone will still not be available when it's supposed to be available. Someone will still close at the right time. They are not having to work overnight or do shift to be able to clear the backlog. So I'm not sure. I think there should be a lot of reorientation in custom to really do that job of trade facilitation, which is one of their primary objectives.
Now, another issue that the Nigerian Customs raised, of course, is the issue of the duties and charges, and they're saying they're still awaiting, the National Committee on the list of duties and charges waived for liberalized goods under this deal, as well as the list of 90% liberalized national trade offers. So for you, what are your expectations regarding these?
I'm also eager to see that list. I'm very much eager to see that list because that will help a lot to know what the government is thinking in terms of what should be on the exclusive list and the rationale behind what is on the exclusive list and what should be on the sensitive list and the rationale behind the non-sensitive list also. I'm also eager to, in fact, we've been asking the government body concerned about this, and they said they are already working on it, that it's actually in process. And I think in the coming days, maybe sometimes in February, we should have access to that. Because I'm waiting for that, and all the experts in the trade community are also eager to see that document.
So the federal government declared this month as month of AFCFTA sensitization. How much enlightenment campaign is going on at the moment?
They are just about to start. And I would rather January is the month of starting, not the month of sensitization. I think sensitization will be for the whole of this year. Right. Because we need a very serious and heavy sensitization, just like we do during election, so that every business concerned in Nigeria is aware of the possibility, potentials, and opportunity that await them, and how also to be able to go about the AFCFTA.
Okay, now I know you've been having meetings with the different stakeholders, and we know that one issue, I think you did mention that the rule of origin. How much of understanding do businesses have regarding this? Because this is very important.
That's the game changer for any free trade agreement, the rule of origin. Because what the rule of origin does is to ensure that a third country who is not a part of that agreement does not have easy access as the state parties or contracting party who have signed and ratified that agreement. In the case of AFCFTA, just like any other agreement, you typically will have the products that are deemed to be originating from Africa, which can be value addition, the level of raw material in the product, value addition, and processing. So for ETLS, for example, you expect about 60%, and I think AFCFTA is also 60%, but the detail also will be made available. But I think the raw material level is about 50 to 60%, depending on the nature of the item. But the idea is, if you say, I was talking to someone on this, one of the companies in Nigeria, about those that are sourcing their raw material from outside. In fact, we had a program with Man yesterday, and I raised this issue about the fact that a business sourcing its raw material from outside the continent, we need to rework the supply chain in order to see the possibility of sourcing that raw material from within the continent if such a business is going to be able to enjoy the benefit of AFCFTA. Because when you source raw material from within the continent, that product, and it's about 60% or even 70%, that product can be deemed to be originated from Africa. So also processing that will change the tariff heading of a product such that you are bringing in a product, by the time you finish processing, maybe the product coming as a concentrate, now it's a juice. So the tariff heading of the product have changed. Such a product also, because of the process that I've done, is deemed to be originating products. So also for value addition. Value addition that increase the value of that product from a particular amount to another amount. In ETLS to be about 30% in increase in value. that's also deemed to. But the idea of it is that you are substantially processing, producing, adding value to that product on the African continent to be able to enjoy the benefit of AFCFTA, which is to be able to ensure that we create jobs and wealth on the African continent.
Okay, the Nigerian Office for Trade Negotiations in its guidelines for export to AFCFTA countries noted that the Nigeria Customs Service will be the issuer of the AFCFTA Certificate of Origin. Do you have any concerns on this?
Now, I'm very concerned about that. Very, very concerned about that. Even though the statement says ratified by, now, there's a concern about what NOTN issued. And I'm hoping in the coming days, National Action Committee, together with Ministry of Commerce, will come out to tell us how exactly it's going to work. For me, when I saw that document, to me, it looked a little bit simplistic, and it doesn't look as if it's going to work. Because currently, under ETLS, you need to apply, and the application will be reviewed, and then there's a committee that will visit to ascertain what you have said. The way that document is like, I will just apply and get the document, and then I will go and get it. There should be a committee that will ascertain that if I claim this product is from Nigeria, it's only Nigeria, they will come and see the factory. They will come and check to be sure indeed that is the situation. So maybe at the end of the day, the document will now be issued by Customs after a private a body have reviewed it, which include public and private, so it can be a bit business-like. And I am also recommending that such applications should be online. Currently, under ETLS, people have complained about the fact that they apply for such, even though it's supposed to be free, they are paying for it because of, understand the issue of corruption in Nigeria. But in this case, the committee meets that time about twice, once in a quarter or once in 2 months. I think under AFCFTA, the committee should be meeting every week because there will be a lot of application, and the committee should not just be centralized. It should be in every zone of the country. But maybe the document will be issued centrally. But we should have a committee that will be able to be in every zone so that it will be easier to assess the factory and be able to get this document out. But leaving it alone in the art of custom, I think will not be nice at all. We know already what issue many people have with custom on the import side. They can be alone in charge. I think it's going to be a public-private partnership in which there will be Ministry of Commerce, Industry and Investment, Ministry of Trade and Investment. Then, of course, the Nigerian Promotion Council should be part of that committee, and a number of other stakeholders like NASIMA, LCCI, and the like. All
right, it's a sensitization month. That's what the federal government said. Yeah. So we'll continue to talk about that. Thank you very much, Mr. Bamidele.
Thank you.
Trade expert.
Thank you for having me.
Commodities market update is next.
All right, let's get an update from the global oil market. Oil prices were lower in the afternoon of Asia trading hours, with international benchmark Brent crude futures down more than 0.3% to $55.89 per barrel. U.S. crude futures shed 0.43% to $53 per barrel. Oil rose on Wednesday on expectations that U.S. President Joe Biden's administration will deliver massive stimulus spending that will lift fuel demand and enact policies that will tighten crude supply. U.S. President Joe Biden, who was inaugurated on Wednesday, is expected to take measures to curb the U.S. oil industry, including re-entering the Paris Climate Accord. This month, Brent hit an 11-month high of $57.42 a barrel, helped by Saudi Arabia's pledging to make additional voluntary cuts, and most OPEC Plus members agreeing to keep output steady in February. And now, Bolanle Agbaje is here with us for the Commodities Market Update.
Hello.
Thank you for joining us. So, Joe Biden finally inaugurated.
Great news.
Yeah, great news. As a new U.S. president, what hopes does that present for the global economy and commodities markets in particular?
Yeah, so off the bat, obviously, the uncertainty we had for the past 4 years has significantly, gone or diminished in the sense that, with Biden in, we have a policy direction. We can more or less, we can form rational expectations. You almost can predict, the direction of his policies. And you don't have a case where you'd have any shocking factor in this case.
Yeah.
And regarding commodity prices, if Biden is now that Biden is the new president, we should expect policies that would go in line with actually promoting or increasing the prices of some of the commodities in the short term, at least.
Already we've seen what he has done, and signing an executive order,
Yes.
coming back into the Paris Climate Accord,
Yes.
back to WHO,
Yes.
and of course everything.
Fixing, yeah.
Exactly. So for some analysts already, Biden's policy is giving a boost to the oil market. But then the IEA is warning of a potential lockdown and its implication on demand for oil. That means prices probably will still drop. Does that give you a worry?
We've always been for the fact that oil prices, we wouldn't necessarily see oil prices increase significantly, at least in the first and second quarter. And I think that's in line with the IEA's predictions or forecast. And that's just because it's still too soon to, obviously, vaccines rolling out is quite slow. And it will take up until like the third or fourth quarter before you actually start seeing. In fact, I think they even mentioned beginning of next year before we start seeing the true impact of, resolving this COVID pandemic. I think that's where their concerns come from. But I believe in the short term, we should actually see, even if prices don't get back to pre-pandemic levels as quick, but we should definitely see increases in the prices of commodity prices in general, just because, with the new with 1.9 trillion that is going to be put into the U.S. economy, money spent on infrastructure, that should obviously boost oil demand in the short run.
Okay. So U.S. Treasury Secretary nominee Janet Yellen
Yes.
on Tuesday urged lawmakers to act big, and on the pandemic relief spending, a fall in the dollar after the comments helped oil to rally. Do you see increased fiscal support boosting U.S. oil demand at this point?
Yes. I definitely see increasing spending boosting U.S. oil demand because, like I mentioned, with the increasing in construction, infrastructural spending, that should definitely increase the demand for oil from the U.S. And also boosting industrial output generally would definitely, increase household income and definitely, contribute to increases in demand for oil. But I think the only limiting factor is the fact that Biden is pro-climate change and, his policies going forward would more or less limit the use of oil. So that's the only limitation that we're seeing going forward. But I don't think that should play any role so soon.
Okay, now, a more disturbing one, COVID cases rising globally. And of course, here in Nigeria, Lagos, the commercial city, being the epicenter. And, there have been this COVID patients in dire need of oxygen. You
Yes.
have it there as one of the downers. Can we put this in perspective as far as the commodities space is concerned?
I think last year, the only impact we had seen in the commodity space was as a result of the lockdowns and, hampering, supply of most of these commodities we have in the country. But this time around, despite the fact that COVID cases are surging, there's more increased demand or need for oxygen, the government cannot afford a lockdown. And because we know that, there shouldn't be any threatening factor to commodity prices, at least for now.
So you have in your report that the palm oil output is dropped in Malaysia.
Yes.
What does that mean for Nigeria?
So Malaysia is the second largest producer of palm oil after Indonesia. Yeah. So definitely once you have big players like that, supply in big players affecting prices, definitely we should see a drop or an increase in the demand in the price of palm oil as a result. But the CBN had limited the importation of palm oil in Nigeria. So there should be limiting factors on the price rises or the price increases in the country. However, Nigeria is still one of the largest, we have the highest price of palm oil when you're looking at, comparing it to other countries. Yeah. And currently, I think our palm oil is about 19,000 naira, 1 year high at the moment. And I think the only people that would mostly benefit from this is the companies like Okomo and Presco. So that's the only impact that I think we should see. Definitely, global prices of palm oil should increase as a result, but I don't think that would be felt so much in Nigeria, just because our prices are already high.
Okay, let's look at what you have there on the commodities and price movement. Could you take us through that chart there? You say commencement of planting season to feed into commodities prices.
Yeah, so the normal trend is that during this time, up until about May, is usually, more or less the planting season for most commodities. And when that happens, most farmers have diverted funds into buying more of their, inputs into the next harvest season. And that obviously has a detrimental impact on supply, which should obviously, increase the prices of many or a range of commodity prices in the country. So I think that's the impact of that. But we hope that, we don't get prices that, skyrocket or get into the 1 year high that we had seen last year.
Okay, price of flour could rise.
Yes.
To 15,000 naira per 50 kg bag, as a global wheat increases 3.27 so far.
Just in January, yes.
Should we expect an increase in price of bread at this point?
That's a major staple.
I think so, because in the past we had seen, just because of the gradual increases in the price of wheat, we had definitely seen, the repercussion of it on the price of bread. I can't remember the last time bread was probably 100 naira. Currently, it's about 300 naira per, at least for a medium loaf. And we should expect that, the prices to hover between 300 and 350 naira, because it's
when you say medium loaf, I mean, some people sell as much as 500, 450.
Yes.
Yeah.
But the average price is usually about, 300 naira. Most likely would increase to about 350, just because it's a major input. We import most of our wheat. We don't produce as much. And obviously the companies who are already facing, increases in cost with other aspects. So with oil and, electricity, those are the things they're already facing. So increasing in the input of, their or the wheat production is obviously going to, play into the price of bread.
No, but do you see the producers actually reducing perhaps the ingredients they use and then probably not having impact on the price?
I think we will definitely see that. Well, I will definitely see, them mixing qualities of wheat as well, which is unfortunate. But, some of these companies have to do what they have to do. But I'm not saying that, this is what is happening. This is what's happening, but it's a likelihood.
That's a possibility.
Yes.
All right.
Okay. Next week is MPC meeting.
Yeah.
The other time you said is one to watch. There's a lot to watch, but you say status quo is likely. But do you see any policy announcement for the FX market and then this low interest yield in the fixed income market? Do you see the CBN tinkering with any of these?
No, not between now and next week. I don't see any policy or any different policy announcement. I think the CBN will focus on watching for now. I know that, a tight or a rate hike is round the corner. Is definitely going to happen soon, because it's the only option that they have because of the inflation rate. And obviously they'll continue with their forex rationing, because at least we're seeing the effect or the positive impact of that with reserve accretion. And so obviously I mentioned the last time, the securitization of the government overdraft that has obviously tried to or supported in mopping up liquidity in the market as well.
And we've seen what Fitch is saying today, warning,
that ways it
means
that they're using to fund the budget deficit. So I think with that happening, they would probably be careful about how they proceed or move forward from now.
All right, thank you very much, Bolanle. It's always a pleasure to have you. It's been a great week, so we look forward to a new week and a brighter day on the commodities markets.
And cheap bread.
Is that the only thing? Okay, we'll take a moment and we'll be back. All right, Standard Chartered has projected a 2.5% recovery in gross domestic product for Nigeria in 2021. According to the Managing Director and Chief Economist, Africa and Middle East for Global Research at Standard Chartered, Razia Khan, the growth in 2021 is premised on the stimulus measures put in place by monetary and fiscal authorities last year. Ms. Khan was speaking at the NSE 2020 market recap and 2021 outlook.
We know that last year is likely to have been a tough year. We think a contraction of around 4%, 4.3% in GDP. Nonetheless, our expectation is that we will see recovery in 2021. And we're above the consensus in terms of what the World Bank, the IMF seem to be expecting. What is the recovery premised on? First of all, policy in Nigeria, fiscal policy and monetary policy, tried to be as accommodative as possible. And we know that much of the Nigerian economy is around activity centered in the non-oil sectors. We think the impact of that earlier stimulus will be felt more clearly in 2021. Also, there is the good news that we already see a higher oil price in place. But the question is this going to be enough? If we move on to slide 14, this is a lot of what preoccupies economists looking at the Nigerian economy. How much has there been a meaningful change in the basic oil dependency of the economy? We know that oil is less than 10% of GDP. Oil exports as a percentage of total exports. You can see the numbers there. The blue bar is where we were in 2012, and the green square is an estimate of where we were likely to have been in 2020. Yes, there's been some reduction in the dependency just on oil, and that was really a function of what happened to oil prices in 2020. Oil revenue as a percentage of total revenue, also a function of what happened to oil prices in that year. The real question is, what does Nigeria need to see to have meaningful diversification prospects in place, to make real progress in diversifying its economy and making itself more resilient to the impact of these oil cycles?
Anyway, let's look at Wednesday's activities at the equities market with Edidion Iwan.
Good morning, Ladi. Well, the market is up, or it was up yesterday. It's also up today. And, just following his counterparts in global markets, which are actually up today. I'm not sure that's what's driving the Nigerian markets. But anyway, the market was up yesterday by 0.23% to 41,147.72 points, while the equity cap was at 21.524 trillion naira. But very quickly, let's just talk to Adedoyin Allen, the Acting Managing Director at AfriInvest Securities, for more on the trading day. Good morning, Adedoyin. Thank you for joining us on the program.
Good morning, Edidion. Thanks for having me.
Well, the markets closed positive yesterday after 2 consecutive sessions of declines. What was responsible for the renewed interest?
Oh, okay. Thanks. If we recall, the market closed on a strong note last week with week-to-week gain of 2.6%. So we can attribute the decline in the first 2 trading sessions of the week to profit taking. We also saw the Nigeria National Bureau of Statistics release December inflation figure last Friday, with inflation now at 15.8%, December inflation. If we also consider the fixed income space, that is still unattractive to investors, and that market is not close to inflation rate. So investors are still looking out for alternative investments that will give higher return, and most of them have positioning in the equities market. Hence, the gain recorded yesterday. And if we look at what's currently happening in the market, most of the stocks we've been seeing this goes on. Insurance companies have been on the upward trend. We've been seeing gains in Mansa, Japol. Transport has been on bid for like 5-6 consecutive trading sessions, but as of this morning, it's available at about ₦1.21 kobo. We've seen Japol and Mansa, people that have bought and are looking to take profit. Japol and Mansa and some of other insurance stocks, they've been on offer for like 3 consecutive trading sessions. That's people are willing to sell and no one buying. But we've been seeing traction in that space of recent. Currently, the all-share index is currently at a loss of about 0.07%. Some of the index, NSE banking stock, is still kind of down at the moment. So it has currently lost 0.26%. as we speak. The insurance sector, NSC Insurance, the oil and gas sector is gained about 0.18% as at this time in the market. So looking at the market in general, it's not bad. It's not looking downward yet, but we are expecting traction. But as the market continues, probably we'll still see a bit of profit taking, but it will stabilize soon.
All right, Adedoyin, thank you for your input on the program. Adedoyin Allen is the acting managing director at Afri Invest Securities. Ochimi, just like Adedoyin said, just before I came in, I also, looked at the markets, and the markets are actually up. It's being driven by Ardova, WAPCO, Cornerstone Insurance. So those stocks are currently pushing the market up. And yesterday we saw gains on all those counters, apart from the banking sector. Now, the banking sector was dragged single-handedly by GT Bank. All the other lenders were positive yesterday. So let's just see how things play out in the market today.
Well, I guess the picture Adedoyin was trying to also paint there is the fact that there's still some kind of cautious trading, I guess. Okay, Eddie, we'll take another break, and then when we come back, we'll do an opening call to London and get back to you. Well, everybody is talking about Biden taking over the White House in the U.S. Let's see how that is playing out in London this morning. Let's talk to Juliana. Good morning, Juliana. Well, Biden finally gets inaugurated as 46th president of the United States. We watched that beautiful fireworks display and all the performances there. But more importantly, in his speech, he called for unity, and he went ahead to sign several executive orders, including rejoining the Paris Climate Change Agreement and the WHO and a host of others. How are investors in the UK reading these moves?
Good morning, Chimiza. Yes, it's a bright new day, a brand new America. And of course, being the leader of the free world, it's a brand new world. And I think, given that Joe Biden's speech, his inauguration speech yesterday, less patriotic than we've heard in the past, more human-like, I think, the global equities market, they all liked it. We've seen that all the major markets across the world are trading higher this morning, overnight. All the major indexes in the US finished record higher, and in Britain the FTSE All Share has opened up about 27 points higher. Of course, America is the world's strongest economy, so even though Joe Biden, of course, has a lot of work to do within his own borders, people across the world are looking to him too for hope and freedom, especially here in Britain, because we are, of course, America's strongest ally. But I think for traders, the most important thing is that the Biden administration can swiftly remove this deadlock that we're seeing with this US stimulus, and they can start pumping money into the economy so that they can remove some of the deadlocks that we've seen in trying to restore some post-pandemic hopes. But yes, it definitely was a tearjerker last night, and we're hoping for renewed relations in the months to come.
And you participated in the Africa-UK Investment Summit yesterday. What was the major takeaway?
Well, it's interesting yesterday. Of course, it didn't have the fanfare that it had last year. Last year, channels, of course, were right front and centre, where we had probably, if you take away some of those big weddings that do take place every now and then in London, the biggest delegation that Nigeria has ever sent to the UK, of course, led by President Muhammadu Buhari. And last year, there was about £350 million pledged for investments between the UK and Nigeria. Of course, the pandemic is taking place at the moment, so we didn't have the fanfare that we had, but it was certainly quite a decent event. The most prominent speaker was Prime Minister Boris Johnson. He was there for a few minutes at the start, reiterating his plans to make Britain the investment partner of choice for Africa. It's not going to be easy because the EU, particularly led by France, are pumping in billions. China are way ahead, so we cannot compete with them. But, Britain are focusing on some key areas which are really important to Africa. Sustainable infrastructure, renewable energies, financial and professional services, agriculture and agri-tech. These are the buzzwords, or these are the main sectors that Britain are interested in. So it's going to be interesting to see what came out. No major headlines, unfortunately, but of course, they were overshadowed by what was taking place stateside. So hopefully over the next coming months, we could get an update on perhaps some of those main investment deals that were signed behind closed doors during yesterday's virtual conference.
We look forward to that. Okay, let's talk a little bit on the corporate side. Unilever has said that by 2030, it will refuse to do business with any firm that does not pay at least a living wage or income to its staff. What is Unilever driving at?
It's an interesting story, and Unilever are kind of leading the way of all the blue chip companies who are trying to, let some of the billions of pounds that they're making trickle down to those that are really doing the back-breaking work. So they're focusing on production lines, particularly in manufacturing and agriculture. Lots of charities across the world have been talking about the fact that, especially when you're farming for cocoa, some of these ladies, farmers across the world are getting pennies, and it's absolutely ridiculous. So they have pledged that they are going to make sure not only their staff, because I believe there are tens of thousands of staff across the world are already receiving the living wage, but those below the staff that you really don't hear about, that are actually doing the most important work, they want to make sure that they get their fair share. We've got a statement from Unilever. They've said to me that ensuring that people earn a living wage or income is a critical step towards building a more equitable and inclusive society, allowing people to afford a decent standard of living. We've also heard from Oxfam. They're really happy with this announcement from them. They say Unilever's plans shows the kind of responsible action needed from the private sector, and it can have a great impact on tackling inequality. We already know that COVID-19 is likely to push up to 200 million people into extreme poverty. So some of the world's biggest blue chips, led by Unilever, are trying to make a little bit of a difference by making sure they get their fair share of wages.
All right, Juliana, we'll get back to you later in the day for intraday update there.
That's a good one. Fair wages.
Yes. Okay.
Now for the debt and currency market, Eddie is back on.
It continued its bearish trend yesterday as the average yield declined or rose by about 10 basis points. You saw yields rise on the short and on the long end of the curve, while the mid segment was flat. There were 14 deals worth 6.30 billion naira. But there was also a bond auction yesterday. So let's talk to Olorun Toba Showemimo, a fixed income dealer at FSDH Merchants Bank, to find out more. Good morning, Toba. Thank you for joining us on the program.
Hi, good morning, Eddie. Thanks for having me.
Well, just tell us, what was the turnout like at the bond auction yesterday, and how will that shape trading today and tomorrow?
So yesterday we had the much anticipated auction, the first of the year. We had a total amount of 150 billion. It was largely subscribed for 238.28 billion, while 122 billion was sold. The two things that we can take away from this auction, from the subscription levels, we can tell that there's still a significant demand for government securities, while on the other hand, market participants are indicating their willingness to buy at these auctions at much higher yields. We had the 10-year, the 15-year, and the 25-year bond on offer, 50 billion across boards, and we saw a significant rise in the yields. The 27th closed at 7.98%. The 15-year bond, the 2035, closed at 8.74%, while the 25-year, the 45s, closed at 8.95%. At the last auction, for the 15 and 25 year, it was at 6.945 and 7% respectively. That's almost a 200 basis point increase on those securities. So we can safely say that participants are willing to invest in government securities, albeit at higher yields. So we should see that excess demand trickle into the market today.
All right, Toba, thank you for your input on the program. Do enjoy the rest of the day.
Thank you too. Thank you.
Lauren Toba Showemimo is a fixed income dealer at FSDH Merchants Bank. Well, we saw yields, rise at the Nigerian Treasury bills market yesterday. There were 6 deals worth 2.74 billion naira. We saw some activity at the CBN bills market as well. And then we had 15 deals in the OMO market yesterday, Ladi.
Interesting. Anyway, Eddie, thanks for the update. Chimi, the market is looking, attractive.
I'm interested in your crypto market. What's the update there?
Well,
I saw something this morning. Bitcoin going storage. What does that mean?
Well, that's investors looking to go long on Bitcoin, at this point. So they are taking it off the exchanges, at this point, so that they do not, sell.
What's
basically.
Bitcoin at the moment?
Well, it's down $33,000 today.
Yesterday was 35.
Yeah.
What about the Ethereum?
And Ethereum too is down about $1,200. So it's a sea of red today in the crypto market. But, it might just be profit taking,
Yeah, altcoin.
Yeah, so.
Okay, thanks, Ladi, for that update. And
Yeah.
That's it on the program. Thank you for watching. I'm Chimeze Obi Iwago.
And I'm Ladi Williams. Thank you for watching.